Hi, I'm Dongxiang. Welcome to Digging into China, where we explore China in depth to review unique perspectives. Recently, the Chinese Communist Party announced China's 2024 GDP growth rate, which, as expected, aligns perfectly with the party's plan and Xi Jinping's words. GDP growth is exactly 5%. Xi Jinping really is a modern-day deity, effortlessly turning his words into reality, declaring the GDP growth rate as he sees fit. But I'm curious about everyone's reaction to this data. My guess is that most people's first response would be, it's fake. First off, this 5% growth figure feels at odds with the actual experience. In 2019, China's GDP growth was 6.1%, and the last year it was theoretically only 1.1 percentage point lower than 2019. But the difference in how it felt was stark, like night and day. The gap is certainly much more than just 1.1 percentage point. Beyond the discrepancy in perception, the CCP's economic policies don't really align with this 5% growth figure. As we know, in the second half of last year, the central government rolled out a massive array of stimulus policies, including a 10 trillion yuan market rescue plan. In December's Politburo meeting, the CCP even called for additional special economic support. China also repeatedly cut interest rates last year. No government would adjust its economic policies to this extent over a minor slowdown from 5.2% to 5% growth. Historically, such small changes were the norm in China. For example, in 2019, the growth rate dropped by half percentage points from 2018. Looking at Xi Jinping's first decade in office, excluding the pandemic period, the early years saw GDP drops of about half a percentage point, much larger than the reported GDP decline for 2024. If the 2024 GDP growth rate really is 5% and the 2023 growth rate was 5.2%, it would suggest that China's slowdown is within a normal range. Clearly, the CCP had no need for such extensive market rescue measure, and Xi Jinping didn't have to act as if the economy were on the verge of collapse. Of course, we shouldn't base our judgment of China's GDP on feelings alone. Let's dive into the data and analyze the potential manipulation behind China's GDP figures. On the issue of GDP falsification in China, I particularly agree with economist Gao Shanwen, who argues that since the pandemic, China's GDP growth has become increasingly distorted. While there may have been some manipulation of GDP figures before, it was on a smaller scale. However, after the pandemic, we've entered a period of large-scale falsification. I've summarized the pattern of China's GDP manipulation as one truth, two falsehoods. The current GDP composition consists of three main components: consumption, exports, and investment. Consumption is further broken down into household consumption and government consumption. These three components contribute to the final GDP growth rate. For example, if the GDP growth rate for 2024 is 5%, how is that figure derived? According to the CCP's own reports, 2.2 percentage points of the growth rate come from consumption, 1.3 percentage points from investment, and 1.5 percentage points from net exports. Adding these up, 2.2, 1.3, and 1.5, gives exactly 5%. Out of these three driving forces behind the GDP growth, one figure is relatively accurate, while the other two are more questionable. The trade data is the more reliable of the three, while investment and consumption are the more dubious figures. Why is the trade data considered relatively reliable? Because it's harder to fabricate. This data needs to be cross-checked with other countries. For example, if China claims to export $1 trillion worth of goods to the United States, the US will have its own import data. If China says $1 trillion, but the US data shows only $500 billion in imports from China, the numbers won't match. So it's difficult to manipulate import and export figures, which is why they are generally seen as accurate. Of course, trade data can still be manipulated, but not directly. For instance, to counter U.S. tariffs, China might export a large volume of goods to the U.S. at the end of 2024, temporarily inflating the export numbers for that year. Additionally, practices like subsidy fraud could also increase export figures, making them appear higher than they are. On the other hand, China might slightly exaggerate the impact of net exports on GDP. For example, the actual contribution of imports and exports to GDP might be 1.3%, but the government could report it as 1.5% by adjusting it upward by 0.1 or 0.2 percentage point. This is possible, but overall, the distortion is relatively small, which is why I still consider GDP data to be somewhat reliable. Now, shifting to the two more unreliable data points, consumption and investment. These are mainly internal figures, making them easier to manipulate. Not only are these numbers inflated, but they also have a particular characteristic. They are artificially adjusted. Each year, the central government sets a GDP growth target, such as 5% for the year. Then, based on the more rigid trade data's contribution to GDP, the consumption and investment figures are adjusted to meet the target. For instance, when comparing 2023 and 2024, most people would likely feel that both years are equally challenging, with no clear winner. It's difficult to make a straightforward comparison. However, when it comes to consumption and investment data, there is a significant gap. In 2024, due to stronger trade data, the contribution of consumption and investment to GDP is relatively low, with their combined growth rate needing only to reach 3.5%. In contrast, 2023 was different. The low export numbers in 2023 resulted in a negative impact of imports and exports on GDP at negatively 0.6%. As a result, the government had to heavily manipulate the consumption and investment figures to artificially inflate them, ensuring that the GDP growth could still surpass 5% in line with the Communist Party's target. This disregard for the actual figures and the forced inflation of consumption and investment to make up for low GDP growth led to a disconnect between the government's targets and its own data. For example, the core data that determines consumption is the retail sales of consumer goods. In 2023, the impact of consumption on GDP was higher than in any year before the pandemic under Xi Jinping's leadership, second only to 2015 and 2017. However, the growth rate of retail sales was lower than in any year before the pandemic, which doesn't make sense. This discrepancy suggests either that the retail sales data after the pandemic was underreported, or that the contribution of consumption to GDP was artificially inflated. It's clear that the likelihood of falsifying retail sales data is low, and if any manipulation occurs, it would be an exaggeration upwards. This aligns with economist Gao Shanwen's analysis, which points out that post-pandemic, the growth rate of China's retail sales of consumer goods and the GDP have completely decoupled. Before the pandemic, nominal GDP growth was always lower than the growth rate of retail sales. However, after the pandemic, nominal GDP growth has greatly outpaced retail sales growth. According to Gao Shanwen's method, over the past 5 years, the growth rate of retail sales is only about 40% of what it was 1 year ago. Therefore, the contribution of consumption to GDP should also be roughly 40% of what it was before the pandemic, averaging around 1.66%. But the Communist Party claims that the average contribution is 2.46%, which is 0.8 percentage points higher than the actual figure. The same pattern can be seen with investment. Before the pandemic, a fixed asset investment grew slower than GDP, but the difference wasn't significant. After the pandemic, however, investment growth has been roughly half of GDP growth. Clearly, the impact of consumption and investment on GDP has been inflated each year since the pandemic. Beyond these macro-level figures, other detailed data within China's GDP growth also failed to hold up under scrutiny. Let's return to the three pillars of GDP growth, adhering to the principle of one true and two false. I won't spend too much time on the trade data. The reported 1.5% figure is likely accurate, though it might be closer to 1.3% or 1.2%, but the difference won't be significant. Our main focus here will be on the consumption and investment data. Starting with the consumption, which is something everyone is directly affected by. Generally, consumption would be split into government and household consumption, but the Chinese government doesn't make this distinction in its statistics, combining them as a whole. In practice, government consumption typically makes up 30% of total consumption, while household consumption accounts for 70%. If consumption contributed 2.2% to GDP growth, that means government consumption should have contributed 0.66%, and household consumption should account for 1.54%. However, the government consumption data doesn't align with the figures released by the Chinese government. In the first 3 quarters of 2024, total government expenditure grew by just 1%, much lower than the 2.2% average increase in consumption. With such a modest growth rate for government consumption, its contribution to GDP should be no more than 0.2%. On the household consumption side, in order to match the reported 2.2% contribution to GDP, the government claims that the per capita consumption increased by 5.3% in 2024. But this figure is highly questionable. At the macro level, the numbers don't add up. For instance, in the tax data for the first 3 quarters of last year, the two major consumption-related taxes, value-added tax and the consumption tax, underperformed. Value-added tax dropped by 5.6% year-on-year, and while consumption tax grew, it only increased by 1.6%, far below the claimed 5.3% rise in per capita consumption. To put this in context, in 2019, the government reported an 8.6% increase in per capita consumption, and despite a modest 1.3% increase in value-added tax, consumption tax surged by an impressive 18.2%, which was consistent with the reported growth in per capita consumption. This year, however, the situation is different. Why is that? Could it be that consumers are evading taxes? Additionally, some of the detailed data released by China doesn't hold up under scrutiny. For example, government reports show significant increases in spending on education, cultural entertainment, and transportation and communications. The rise in transportation and communication spending in 2024 can be attributed to the promotion of electric vehicles, which likely boosted sales, driving up transportation costs. But the increase in spending on education, culture, and entertainment is harder to explain. Both urban and rural residents saw more than 9% rise in these categories, with an overall increase of 9.6%. If we compare to 2019, per capita spending on education, culture, and entertainment for urban residents in China increased by 600 yuan, while for rural residents the increase was 700 yuan. However, this figure doesn't align with other data. For instance, tourism, the largest category within education, culture, and entertainment, has seen some growth in 2024, but still only matches 2019 levels, not exceeding them. Similarly, movie box office sales are far lower than in 2019, and even compared to 2023, there has been a decline. The only area with a noticeable increase in entertainment is gaming, which saw a 7% growth in revenue. But this still doesn't meet the reported 9.8% increase. So where exactly is the surge in education, culture, and entertainment spending coming from? Could it be that people are spending more on extracurricular activities or college prep services than 5 years ago? This is difficult to believe, especially since the extracurricular education sector has been severely affected by Xi Jinping's policies. And China's declining birth rates have led to many schools struggling to fill seats. With fewer students, where are the people attending these prep courses? It's harder to understand how spending on education, culture, and entertainment could increase by more than 9% compared to 2023, or by an additional 700 to 800 yuan per person compared to 2019. Could it be that the spending on KTVs and the clubs has seen a dramatic rise? However, that doesn't seem to reflect the actual situation. Additionally, consumer confidence has been steadily decreasing, making it hard to believe that consumption is growing as the government claims. If consumption were truly as strong as described, China wouldn't be experiencing significant deflation, and there wouldn't be a need for so many stimulus policies. The Consumer Price Index (CPI) wouldn't be stagnant, and import growth wouldn't be hovering around zero. In my view, last year's domestic consumption likely only attributed around 1% to GDP growth, or possibly even had a negative effect. With the government's consumption figures adding up to only 0.2%, there's no way they could reach the claimed 2.2% contribution. Investment follows a similar trend. Official data reports that investment contributed 1.5 percentage points to GDP growth last year, but other investment-related figures are showing significant declines. For example, real estate and infrastructure, two major sectors accounting for over 50% of total investment, are both facing challenges in 2024. Real estate investment is down 10.6% for the year, a sharper decline than last year. While infrastructure indicators like cement sales have dropped by 9.77%, bitumen production, another key infrastructure component, has also seen decreased factory utilization rates in 2024. Additionally, the social financing data has been significantly lower in the second half of 2024 compared to 2023. With business not taking out the loans, it's hard to see where the increase in investment is coming from. In this situation, it's unclear how investment can be driving GDP growth. It's clear that China's GDP figures are manipulated, but determining the true GDP growth rate is not straightforward. The GDP itself is built on layers and layers of deception, and even the Communist Party likely doesn't know the exact number. Xi Jinping probably doesn't fully understand it either. While the economic growth rate for 2024 is widely regarded as fabricated, many still believe it will be slightly better than 2023. As mentioned earlier, China's GDP growth follows a one truth, two fake model. Exports and imports in 2024 are far better than in 2023, when trade actually had a negative impact on GDP by negative 0.6% in 2023. In 2024, net exports are expected to contribute 1.6%. This net export boost clearly means that 2024's GDP will likely surpass the previous year. However, some might still doubt that China's GDP will grow by 2% in 2024, questioning whether 2024 is really better than 2023. It may feel like 2024 is underperforming, and a growth rate above 2% seems unlikely. This is understandable. If China's GDP does grow by 2% in 2024, it will most likely be driven entirely by exports, specifically those from China's practice of dumping goods at low prices. The real effect of such exports doesn't matter much. Whether they contributed 10% or 0% of GDP, it's almost irrelevant and could even be harmful. It's like a company selling products at a loss just to increase sales. Higher volumes doesn't help if it results in greater losses. The real indicator of quality of life is consumption, since people's spending power reflects their standard of living. But consumption in 2024 is expected to be weak, which contributes to a poor personal experience of the economy. This is compounded by the difference between nominal GDP and the real GDP, and the impact of currency depreciation, which makes GDP look smaller when measured in US dollars. Given the scale of GDP manipulation, we can already make an educated guess about the 2025 GDP growth rate. China's GDP has become completely detached from reality, reminiscent of the exaggerated grain production claims during the Great Leap Forward. Xi Jinping has set a 5% growth target, and achieving this target is now a political goal. The key factor in meeting this goal will likely be exports. If exports remain strong in 2025, the pressure on the National Bureau of Statistics will be lower, and meeting the 5% target will require less manipulation of investment and consumption data. However, if exports falter, we can expect the Statistics Department to report unrealistically high consumption and investment figures to balance the GDP, ensuring the 5% target is met. China's GDP figures may have had some value in the past, but now they are essentially meaningless. When the data is released, it's purely for mockery, a chance to ridicule the Communist Party and Xi Jinping. Thank you so much for watching. If you find this video helpful, please like it, drop a comment below, and hit the subscribe button right here. It really helps YouTube suggest my videos to others. I'll be back with more content soon. Until then, be well.